So Broadcom's backlog, particularly in AI, disappointed investors, and there are concerns over its profit margins. But our guest says a decline in the shares today is a buying opportunity, and he has raised his price target on the chip supplier from $365 US to $480. We're joined by William Kerwin, Senior Equity Analyst at Morningstar Research. William, thanks very much indeed. Just remind us, would you, what is Broadcom's part in the AI world? They're a chip supplier, and they are in some ways a rival to NVIDIA.
Yes, thanks for having me on, and I appreciate your Christmas tie. So Broadcom's role is in AI semiconductors, and they are in part a competitor to NVIDIA and in part a complementary player to NVIDIA. So what Broadcom produces are what we call custom AI XPUs versus a generalized solution like a GPU from NVIDIA. These are customized chips tailored to a specific application or a specific customer. So Google is a common example. Their TPU is customized to their internal workloads like Google Search and training the Google Gemini model. So they have 5 marquee customers in this business, and they make chips customized to each of those customers. Now, in addition to those compute chips, they also make connectivity chips, what we call networking, and they supply those across the board to really every AI customer you can imagine. But the focus of the call and the share reaction today is really in that XPU business.
And does it look like they have slowing momentum there?
Not in the slightest, in our view. We loved the results last night, and we are increasingly bullish on the name. Rather than any slowdown in this demand, we are seeing an acceleration in Broadcom's demand through the course of fiscal 2026, and we think into fiscal 2027. And there are 3 primary drivers of this. So one is their existing customers are seeing rising demand, and Google is chief among these. There's been a lot of bullish narrative in the market over the past month on the latest TPU for Google. This is a version of an XPU, which trained their Gemini 3 model and is now actually being rented out by competitors like Meta and like Anthropic because it's so strong. So that existing customer demand is rising. We're also seeing a layering in of new customers like Anthropic and like a 5th unnamed customer that was announced last night, adding to a really what we expect to be a surge in second half of 2026 revenue. So far from slowing down, it is accelerating.
Why are investors worried then, William? Is it simply because they're nervous with the huge run-up in the stock for, I think it's 3 years now?
That's probably the background to all of this. There were some nitpicks you could make on the call, so to speak. So these custom XPUs are actually gross margin dilutive, and we think that may have spooked investors a little bit. But we don't worry about that because even if they're gross margin dilutive, the amount of volume that Broadcom is able to sell of these makes them operating margin accretive and earnings accretive. Now, you had mentioned the backlog at the outset of this segment. That was a concern, too, because we think that investors are comparing that to NVIDIA's $500 billion backlog, and Broadcom's, in relative speak, was a measly $73 billion. But these are apples and oranges in our view. The $73 billion number that Broadcom threw out was actually higher than we were estimating, and we think there will be upside there because that was a number given for the next 18 months. We expect new orders to come in over that time. These are generally short lead times, and so we actually see that as a bit of a floor for what they can do over that period.
What about their balance sheet? Have they racked up lots of debt like Oracle?
Not to the extent that Oracle has. Now, Broadcom is a serial acquirer, and 2 years ago, you may remember the massive VMware acquisition that the company conducted. They took out a significant amount of debt following that acquisition and are continuing to pay it down. But simply put, this company is a prolific generator of cash flow, and quickly, even only a year to 18 months out from closing that acquisition, we think they've successfully delevered less than 2 times leverage now, and they are printing $40 billion in cash flow by our forecast over the coming year. So we don't worry about the balance sheet at all. We think it's in pristine shape.
What about generally AI? I mean, it's a very broad question, but do you think there's going to be tears ahead and broken dreams in these stocks? Do you think that the whole sector over the next few months is going to be under pressure?
about expectation setting. We really believe that AI is a long-term trend that will benefit this AI infrastructure and tech hardware over the long term. Now, that is not to say that that's going to be a linear progression up and to the right. And so I do expect there to be fits and starts during this demand. But in the short term, meaning the next 1 to 2 years, everything is highly supply constrained in this environment. And that can be viewed as a negative because the likes of NVIDIA, the likes of other AI infrastructure hardware players could be shipping more today based purely on the demand, but they're being constrained by the supply. But that can also be viewed as a good thing because what that means is that many orders for these chip makers or other infrastructure players are already booked through the course of the next 12 months. And that provides some nice certainty in the market that this revenue is going to manifest. Now, at some point, potentially in the next 3 to 5 years over that medium term period, we would expect there to potentially be a correction or a normalization or maybe a slowdown in this demand. But we would view that as a short term, bumpy dynamic over the course towards this long term positive growth that we expect.
William, we better leave it there. Just remind us, though, one last thing. I mean, is there still an iceberg for AI investors? I'm wondering about these reports we've seen. And of course, it's such early days that corporate customers are not realizing the extra revenue and or savings that they hope for from AI investments.
Well, that is the trillion-dollar question. We think at very least in the next 1 to 3 years, there's enough investor appetite from the investors in the spenders on AI to continue spending in the hopes that that revenue and those cost savings come out. And if that doesn't happen in the next 3 years, then we may be having a different conversation. But we believe it'll come. It may take longer than investors currently want. And that's what I was talking about with that potential for a correction or normalization at some point down the line in the next 5 years.
William, thank you very much indeed. Really appreciate it. William Kerwin, Senior Equity Analyst at Morningstar Research.